Okay. For first question, for foreclosure or auction transaction, which one is the determined? Is it determined as the last bidding price? So they want to know which price is taken into account. So it is always, when auction, is the last bidding price. So that is the one will be taken into account. And then they also ask about the 0% stamp duty on low-cost houses. This one, whether it is still applicable or not. This exemption is depending on the particular projects. If it is approved by the government to be fully exempted from the stamp duty, then it will be applicable. If not, then you still have to incur the stamp duty. Do we need to remember the term before the revise of the act or the budget, or do we need to remember the progress of the changes? This one I've already told you. Very important, you need to know what is the current law. You don't have to go back to 2005 and or the old ones. This year and last year, the one you know is enough. The question is not going to give you example of what happened in 2003 and so on. They won't give. There was also a question they asked. Instead of selling any property or land, if it is, can they save the money on stamp duty by selling the whole company? If a company owns lands, can they save stamp duty by doing that? That means they sell the whole of the company. There is a positive and negative effect of doing this. When a company is sold, they will sell or transfer the shares belonging to the company. So you will still incur stamp duty based on that. Sale of shares in a company will also subject to stamp duty. And then you will also have to acquire all the company's assets. You can't just transfer one. And also you'll be buying subject to liabilities of the company. So you have to see the pros and cons. Maybe the company owns 2-3 property, but they have other outstanding liabilities. So there are positive and negative effect of doing that. Transfer between husband and wife or father to son. Is there any maximum times or amount? So there is no maximum time. You can do how many times also? Yes.
Yeah. I'm just curious, right? Say if there is a loss, so subsequently, if the same person is disposed another properties again, probably 5 years or 10 years down the road, can they still claim the?
No, it is on the same assessment.
Same years. So that means the guy have to dispose
within the 1 year period.
It's a calendar years or
calendar year?
Calendar year.
Calendar year.
Okay.
Okay. Next one. Question 2011. Question 2. Slide 59 and 60. Year 2011. Question 2. Slide 59 and slide 60. Okay. Acquisition price was 400,000. Market value was 600,000. Question is why the stamp duty is 7,000 and not 12,000. Stamp duty, why is the stamp duty 7,000 and not 12,000 based on whichever is higher? When it is auction property, you pay stamp duty based on your auction price. They don't look at the market value because the auction is supposed to be based on the market value already. Homework question 2009, question 2, regarding the stamp duty again. So please calculate as per the formula that I've given.
Mr. Kiru?
Yes.
Sorry, just now I think you have already explained this, but probably I missed that. It's about the question 206, question number 2. The stamp duty, right, is 25,000 is not correct.
The 1%.
Yeah.
2002
206.
2006, no, it's not correct.
So what is the correct amount?
In 2006 was
49. Yeah, how do we come to 49?
Use the current formula which I give you.
The the amount that we are using is 2.5 million or 2.1 million?
I think it is 2.5.
So if I understand the calculations correctly, right, the first 100,000 is 1%. Subsequently, 400,000 is 2%.
Yes.
Then the remaining will be imposed 3%. So if I calculate this correctly, it will be 1K, 1,000 plus 8,000 plus 60,000. 2 million times 3%, right? So
As per the 2000, as per the 2006, as per the 2006 formula, if I use, it is first 100,000 is 1%, 1,000. The balance 2.4 million is at 2%, which works out to be 48,000. That time we don't have the second one. The first, the 400,000.
Okay. Yeah, got it. Thanks.
Mr. Kiru, okay, let's just now the question 49,000, the stamp duty. The question is in 2006, but what they want the stamp duty computation is in 1980. All right, so can we just put the rate basing on the, let's say 2006?
Yeah.
And remember whatever it is in
Actually, you don't have to, you can just disregard it. When you are calculating stamp duty, use the current formula, finish.
Even
now, that one is just for your understanding only. They were referring to lesson 2, 2006, slide 53. It was asked why there is exemption of 5,000 only. So again, this is a old law. That is why it was 5,000. 2006, question 53. On slide 54, if you see, section 7B allows Sandra to use the allowable loss of 14,950 in 2003 against his chargeable gain of 20,650 in 2004. Correct? He has already incurred loss in 2003. So in 2004, when he has to pay tax, he is using the allowable loss to offset. Now the question is, what happened if the loss was in the year 2004 and he gained in 2003? That means terbalik. Can we still use the section 7B? My answer is no. You have to lose first. Then when you gain, you use the loss to offset. You already gained, you already paid the tax already, what? How to go back?
Hi, Mr. Kiru. Just now you mentioned the slide 54, chargeable gain, allowable loss. I saw there's one question, one partial question. They asked us to explain the chargeable gain, allowable loss, explain the tax relief for allowable loss. What that mean?
Explain the tax relief.
Yeah, tax relief for allowable loss. That's a 2011 partial question.
2011.
And I don't have a question, but I am quite sure that they're asking to explain what is the tax relief for allowable loss.
The question is tax relief for allowable loss.
Yeah,
so
correct.
when you have allowable loss, that means there is no gain. Basically, allowable loss means you have no gain. Your disposal price is lower than you do not. That is your relief from the tax. So that is the simple basic. They want to know whether you understand what is the allowable loss or not.
Oh, which means that the tax relief for allowable costs we need not to pay.
There is no gain.
Oh,
so you start explaining to the examiner saying that your disposal price, after taking into account everything else, you minus off the acquisition price, there is no gain. You lost actually.
Okay, understand.
So when you lost, you automatically get tax relief. There's no tax payable.
Okay, perfect.
Okay, refer to past year question 2010, question 2, slide 57 and 58. Okay, the question is there an exemption on chargeable gain as these properties are not classified under residential property as per slide 31? Okay, 2010, question 2, slide 57, 8. Lesson 2. Why is there an exemption on chargeable gain as these properties are not classified under residential property? Again, as I've already told you earlier, the exemption on chargeable gain is the personal. When you're an individual, you'll automatically get that exemption. Whereas that residential property thing is that once in a lifetime exemption. That's two different things. Always remember, when you are an individual, you are selling off a property, you are entitled to that 10,000 or 10 higher. Residential or not. But if it is a residential property, one lifetime you can full exemption. Right? Two different things.
Mr. Kiru, one related question regarding this.
Yes.
Related to just, we are talking about to offset within the year only.
Yes, yes.
All the subs.
One calendar year.
Because in this example is 2003 and the gain is 2004.
Yeah, it is. If you calculate, it is still within the same one year. Not 2003, 2004. From the allowable loss to the chargeable gain, it's still within 1 year. 1 year assessment. Okay, lesson 2, homework question 2004, question 5. Calculation of RPGT 9,800 times 30%, which is 2490. They're asking whether is this correct, because if he is not a resident, he is not entitled to less exemption of 5,000. Therefore, it must be 30% of the chargeable gain. My answer is, if you are an individual, you will get the exemption of 5,000. Huh? Okay, for lesson 2, homework question 2007, question 2. Is there exemption for shop houses? Of course, for once in a lifetime kind of thing is only for residential property, not for shop houses. Once in a lifetime exemption, full exemption is only for residential property.
Please refer to slide number 57. As you mentioned just now, shop houses is not exempted for the chargeable gain tax.
No, shop houses are not included when you claim for your lifetime exemption, full exemption.
So for the chargeable gain,
for chargeable gain, yes. If you are owned by individual, yes.
Regardless for what type of property?
Yes, yes. Yes, even land also
including the
can.
agricultural land as well.
Can.
Thank you.
Homework question 2004, question 5. Alright. The calculation there was 9,800 times 30%, which works out to be 2490. So the question is, they are asking whether this is correct. Because if he is not a resident, he is to less exemption of 5,000. So I was saying that if you are an individual, you are eligible for the 5,000 exemption. 2007 question 2 C. How come RPG 20% for within 3 years? Okay, so the answer is 20%. I think earlier we have already amended that, isn't it? So the answer is 20%. Another question they asked me was this 10,000 or 10%, whichever is higher, when it came to effect. So it came to effect in 2012. There was also another question when it was 5,000. Does the 10%, whichever is higher, is applicable? Yes, that was the old one. But now you can forget about all that. You just use the 10,000 and 10,000 or 10%, whichever is higher. Only that.
Kiru, I just want to recap again. Exemption for once in a lifetime only applicable to residential property for individual only. No company can also.
Once in a lifetime.
Mm.
Yeah, only individual.
Only individual. Residential and individual.
Mm.
Okay, thank you.
Lesson 2,
Yeah.
the combo answer sheet for year 2006, question 2.
Yeah.
Yeah, this section 2 explaining the gain. Can you explain again the sentences on the answer sheet?
Explain what?
The gains, what's the meaning of gains over here? It's like
This
comparing to the slides, it will be easier to understand.
See, this explanation is the actual definition under the Act. Okay, gain means gain other than gain or profit chargeable or exempted from income tax, the income tax law. So basically, when they ask you about gain, gain meaning what? Is a profit that you make from the disposal of a house. So you can always use your own language, what you understand by gain or profit. So what you bought when you acquired the property and when you dispose of the property. If there is a profit there, that is the gain. That's all in simple language.
Yeah, regarding the estate in the question, the agency fees is 2%. So inside your slide 57, your answer sheet, actually the agency fees they deduct on the disposal price. So, however, this question never specified that this agency fee should be considered in disposal price or purchase price. So, can I write down in an assumption that this 2% agency fees is actually applicable for disposal as well as purchase price? So, inside the purchase price, I can actually add inside the agency fees.
When you buy a property, you are a buyer, right?
Yeah.
Buyer don't pay 2%, right? It's actually the seller. So that is why the agency fees comes at your disposal stage. The seller pays the 2%.
Okay.
It depends. It depends. So sometimes in land transaction, there are also agents for the seller. There are also agents for the buyer. So if you do pay, if you do have a receipt from them, you can claim. But I'm talking in a normal house transaction. Usually it is when you're disposing a house only you pay 2%. The seller pays. In normal circumstances. Exceptional circumstances like land transaction and some of the different states, I don't know. If you have incurred, you can claim. You can include it.
Hello, Ms. Kiru. Okay, can you refer to the slide 30?
30. Yes.
Okay, on the second column, there's a 10K or 10% of the chargeable gain as exemptions, right?
Yes.
Okay, then you go back to slide 53.
Yes.
Why is it the RPGT exemptions they charge on 5,000 instead of like 10% or 10,000, whichever is higher?
Because that is in 2006. In 2006, it was 5 or 10%.
So now, whenever there's
From
a question to me,
2012 onwards, it's 10,000 or 10%, whichever is higher.
okay, got it.
So you
Thanks.
don't have to, you can actually disregard the 5,000 thing. Now you just concentrate on the 10,000 and 10%.
One of the questions I was still thinking very hard, explain the exemption allowed for individual and companies in the RPGT Act. Individual, we know, company got exemption.
Where is it? One more question?
No, it's a past year question, 2008. Yeah, I'm trying to do the past year questions, you see.
You have to refer to the Act. If there are any exemption, is there in your lessons? Did they cover? I'm not sure because
That's
whether
why
they
you said
covered.
Is it explain the exemption if I'm
Yeah, you refer to the Act. I think I'm very sure in your lessons they have covered the exemptions, right? There are some exemptions for the mistaken.
individual we know like yeah, 10,000 or 10%, whichever is higher, right?
No, for companies, if you are disposing of the shares and so on, they are also
Share, yeah, maybe it's that one,
Yeah, you have to mention about that.
That one.
That is why I
okay.
say you have to
Now
refer to the
remember.
Act.
Okay, thank you.
Mr. Kiru, page number 14. Can you please explain B and C and slide number 15A?
Date of disposal in particular cases, sir. Is that the one?
Yes.
You want to know which one?
B, C, and slide number 15A.
B is in the case where the legatee accepts an asset in place of money on the date of transfer of ownership, date of disposal. Okay, B is where you are transferring a property to somebody without payment of money. He is that person who's receiving the property, he is bound to receive the property. But in that transfer, there is no money exchange, right? So they are trying to see what is the date, the relevant date. Okay, so here the relevant date will be the date of transfer of ownership, because you do not have an agreement here. C talks about a case where an asset of a deceased person is transferred to the legatee by his executor. When somebody dies, if he makes a will, he will appoint an executor first. That executor can also become a beneficiary, or he may not become a beneficiary. So first he must get a court order to appoint him as the registered executor. After he has registered that, has got the court order, only then he can transfer the property to the named beneficiaries. All right. So now we want to see the date. What is the relevant date? Also, in the case of trustee of a trust created under a will, so the date will be the transfer of ownership of the asset to the legatee. That means transfer of the ownership to the beneficiary, not to the executor.
Slide 15A.
15A, where an asset of a deceased person is disposed of otherwise to the legatee by his executor or by the trustee created under such will, it shall be deemed to have acquired it on the date of the death of the deceased person. Okay. Earlier I explained to you from the executor to the beneficiary. Okay. So the relevant date is the date when it was transferred to the beneficiary. If they are transferring to somebody else other than the beneficiary, then the beneficiary, then the relevant date will be the date of the death of the deceased person. We go back. Understand? Why do you understand? The relevant date is the date of death of the person, not the date you transferred. That is the law. Whether you understand or not, that is the law.
One question, one student to add on something.
Yes.
Yeah, Mr. Kiru, in regard to found the transferring of from the trustee, right?
Yep.
To a trustee, the disposal date is the acquisition date to the trustee, to the legacy.
Yes.
Yeah. So let's say the wife received the house bought by the husband 10 years ago. So the husband passed away, and then under the will, transfer to the wife. Acquisition date is, let's say, last year. So this house, is it kena the GT?
Yes. Sure, kena.
Okay, thanks.
Yes.
Mr. Kiru, okay. Let's say to compute the RPGT, then how to determine the acquisition price? Because it's a transfer from the husband, and then there's no money involved. So there's no acquisition price.
So you have to produce the will, the court order, all that. They want to set when it was transferred.
Yeah, let's say the transfer, the house is sold after just 2 years old. So from here, definitely there is a RPGT, but how to determine the acquisition price?
They will see the date you did the transaction, which they transferred to the wife, right, just now, in your case, and you have to take out that document.
But there's no money involved.
Doesn't matter, even if there's no money involved, you still have to submit the same transfer form, you still have to send for stamp duty, you still have to submit the forms. It will come back with all the exemption. So that date they will take.
Yes, the question is not the date. The question here is how to determine the acquisition price.
Price. They will take the valuation price. When they do the, for your stamp duty thing, when you submit, notice will carry the market value. There is no stamp duty, my dear. It is the notice will carry the market value. The notice will carry the market value. The market value is the one. He wants to know the acquisition price.
Mr. Kiru, so come back to slide number 11.
11.
So upon death of the owner, with will.
Yep.
So the date is these two. It's either transferred to beneficiary or to other than beneficiary.
Correct.
Okay. Slide 57.
I can't hear.
Slide 57. 57.
57,
57.
57.
57, yes. How do you get the stamp duty 8,000? How do you get a figure of 8,000?
Stamp 8,000. Hang on for a while. Because I think somebody asked this in the forum as well, so I want to see. Correct. First 100,000 is 1%, 1,000. The balance 350,000 is 2%. 7 plus 1 is 8. Correct what? Correct. First 100,000 is 1%, Saturbu. The balance 350,000, 7,000. So 7 plus 1 is 8,000, correct?
Okay, I'll refer to slide number 10. I just want to clarify about disposal dates. Is it for leasehold property when lawyer meet the paper for consent or after the consent?
SPA date.
SPA, it's not the consent date.
SPA date.
It's a consent.
Because when we submit the RPGT forms, they only ask for the copy of the SNP. If you do not have SNP, then you can give the MOT also. But if you have SPA, then you can give the SPA. They only take the date from there, whether it is consent or no consent.
So same it is acquisition date also SPA. Thank you.
Kiru,
yes.
This question 2. Go back to the same question just now, the 2.5 million one.
Where?
Okay.
Where?
Repeat, please.
The homework.
Homework?
Yep, 2006 question 2.
Homework lesson 2.
2006 question 2. Yep. Okay. In the calculation itself, it's like excluded the exemption for RPGT, so they have to less the RPGT exemption, right?
RPGT exemption.
Because in the answer they don't less the exemptions.
Which exemption are you talking about?
The RPGT exemptions on the chargeable gain.
The 5,000. The 5,000, is it?
What?
The thing about, is it the 5,000?
Okay, actually it's provided on the answer sheet. Okay, the answer sheet.
Okay.
Yeah, they got less the stamp duty. Okay.
Okay.
And the chargeable gain is about 7,000 something. Say that.
Yes.
Okay.
They never
They,
stipulate
from
about
what the part,
the.
they just didn't less the RP, which is 10% or 10K.
You know why? Because I
Why?
stated to you earlier, the exemption only applies to individual.
Oh,
Okay. Here is company, right?
I see.
That is why.
Okay. Sorry. Thank you.
Never mind.
Mr. Kiru, slide 32.
Yes.
Exemption for company and number 1. Transfer within the same group for consideration consisting substantially in
Of
shares.
shares.
Yeah. So what is the definition for substantially in shares here? So
That means
how much?
majority of shares.
Is there a definite proportion as in 50% or more than 50%? Then it will be considered as substantially.
If I'm not mistaken, is 75. If I'm not mistaken.
75%. Okay.
Mr. Kiru, RPGT, calculation of RPGT, we deduct all the expenses. Does the bank, this what they call it, loan agreement, when I acquire the property, I do pay for this as S&P fees and also the loan fee. Does the loan fee is also an expenses?
Yes.
Can be deducted. Okay.
That comes under.
Everything under legal expenses. Okay, thank you.
There's none, then we call it a day. Huh?
I think because of no more questions, so we end of the session tutorial today.